Right, good morning, everybody. Welcome to our webinar on individual tax returns for 2022. I'll be running through the webinar with you. My name is Meg Dimmick, and my colleague Erin Sneeman will be listening to the presentation in the background, but she's around for the questions and answers at the end of the presentation. Right, so if everybody's ready, let's get started. Right, so let's get started. This is just a brief overview of the tax obligations for individual taxpayers for the 2022 tax filing season. Right, the tax filing season will open on the 1st of July 2022 as usual. As per 2021, auto assessments will continue to run and will also start being issued from the 1st of July 2022. The auto assessment process, as in 2021, SMSs will be sent to the auto-assessed taxpayers. So essentially what's happening here is SARS is looking across their database and they're looking at individuals that have 90% of the information automatically generated to SARS by third parties. They're choosing to auto-assess these individuals. These individuals can either accept or decline auto-assessments. So just because you've received an SMS from SARS, say that you've been auto-assessed, doesn't mean that your tax return has been done and has been completed. You need to go in, you need to accept or decline this auto-assessment. If you do choose to reject or decline the auto-assessment, you'll need to file a return in the usual manner. Tax season dates this year is vital for individuals to realize that SARS has shortened the tax period this year. For normal taxpayers who file online, your season starts on the 1st of July and it ends on the 24th of October 2022. This is a whole month earlier than previous years, so it does mean that returns should be done as soon as possible to avoid any interest and penalties for late filing submission. The next bracket would be from the 1st of July to the 23rd of January 2023, and this applies to provisional taxpayers. Right, taking a deeper look into the auto-assessment process, it runs in line of what was done last year. So the auto-assessment process was introduced in 2020, and this was introduced to basically improve the end-to-end service with SARS, to encourage less time in the branches, to ensure a quicker turnaround process in terms of submitting a return, having it assessed, and getting the results, and basically a delay in acceptance of that auto-assessment results in SARS auto-accepting auto-assessment. So ignoring the SMS, ignoring the notification means that SARS are going to automatically accept that auto-assessment and finalize your return on your behalf. Auto-assessments are tax returns that SARS has completed with all the information for the individual taxpayer from third parties. So this would be information in terms of your RP5 from your employer, IT3B certificates, IT3C certificates for your investments with your banks, medical scheme certificates, and your retirement annuity fund certificates. All of this information would have been automatically sent to SARS, and SARS has populated your return based on the information received. Taxpayers will receive an SMS if you qualify for an auto-assessment or SARS has chosen you for an auto-assessment. Below is just an example of the SMS that would be received to your cell phone. Taxpayers who are auto-assessed have two options. So you can choose to either accept the auto-assessment. Any credit due will be refunded to the taxpayer, and any payment due would obviously need to be paid to SARS on the date recorded in auto-assessment. It's important to note these dates because SARS will impose interest and penalties or interest on your late payment. If you do disagree with the auto-assessment, you can then edit your return, supply the missing information that you believe SARS hasn't received and submit that return accordingly. This would obviously then need to be submitted in line with the tax deadline being the 23rd of October and not November. Apologies for that. Auto assessment, your taxpayer obligations. Each taxpayer needs to validate the auto assessment tax return with the information that you've received from your third parties before just accepting the return. Basically, what we're wanting you to do is the taxpayer needs to compare your documentation to what's showing on SARS. Your RP5 needs to be compared, your medical aid scheme certificate, all your RT3Bs, RT3C certificates from your banking institution and investments, to ensure that what you've received, what's showing on SARS is auto assessment. And if these do agree, then you can obviously go ahead and accept that auto assessment. Taxpayers who have more complex returns, so individuals that receive a travel allowance and would need to submit a logbook to SARS, would in most cases not be able to accept their auto assessment, as the travel allowance and the travel claim logbook all manually added to your tax return. It's very, very important, I must stipulate again, that you mustn't just automatically accept the auto assessment. It needs to be carefully checked because there are circumstances in which SARS have not received the third-party documentation and it might be missing from your return. This is an example of what your auto assessment would look like. So when you log into your e-filing dashboard, you'll get a notification to say you've been auto assessed by SARS. What you can then do is you can click on the little green button to view that auto assessment. Viewing this auto assessment does not mean that you're accepting it. You are just going in, checking the figures. It will bring up another banner to ask if you would like to check and continue to accept or to amend this documentation. On clicking continue, you will then be taken to what looks like your assessment each year, and it'll show you a breakdown of your income. It'll show you a breakdown of your interest, your dividends, and any other medical claims from your medical, and it breaks down all the information that SARS has received from third parties. If you agree with the information and you've compared it to the documentation you have, you can go ahead and accept an auto assessment. If you receive a travel allowance or some of the information in the return is incorrect, it doesn't agree to your documentation, or there's information missing, we would strongly suggest you edit your return, and from there you'd be taken to create a normal tax return as done in previous years. Moving on to completing a tax return the old, or what I would say a normal tax return way. It's very important that when you prepare your own tax return or you're completing your tax return via e-filing, that you're presented with a wizard form. Answers to the question on this wizard form will determine what sections or drop-downs of the tax return become available for you to complete. SARS will automatically complete part of the wizard on your behalf. Again, this is based on third-party information they have received. It's very important that you check all the questions, you check the answers carefully, and you make sure that the information that you are providing to SARS is correct. This is an example of the wizard that will come up when you start preparing your tax return, and you would need to go through your standard questions just to make sure that all the information is correct. In completing your tax return, you would need to, if it's not pulled through automatically, you would need to use your certificates to complete your return, going through those certificates and inputting the information with each of the tax codes given per that certificate. Hopefully, your investment bankers and your medical schemes have sent this information through to SARS. By law, it is required for them to do so. And so hopefully what should happen is this information is pre-populated into your return, and you just need to go through and double check that all is correct. Travel. For those that earn a travel allowance, when completing the travel section, it's vital that you have a cost price of your vehicle and that this cost price is correct. If SARS were to select your return for review or audit, they're going to want to see proof of this purchase price. So initial cost invoice of that vehicle, SARS is going to ask for it. SARS is also clamping down on logbooks. So you need to make sure your logbook is correct and in the correct format, and that all the information that SARS is wanting is available in that logbook. We will touch on this and the information needed a little bit later. Home office expenses. So with COVID, SARS introduced a home office expense claim for individuals working from home. In 2021, SARS released an updated interpretation note regarding the claiming of home office expenses. The document adds to the previous interpretation note, with SARS including more information pertaining to the home office qualifying criteria. With COVID-19 and the various variants still making their rounds, there are some organizations that have kept staff working from home. I need to really emphasize here that if you are a staff member and you are earning a salary and you are working from home, it's vital that there are very clear circumstances as to why you have to work from home. Were there further lockdown regulations that you could not attend to the office? Were there closures of office due to COVID outbreaks? It's very important that you are very certain that work from home was an absolute necessity, that it was a have to. So for employees to make a home office claim, SARS has very strict criteria and supporting documentation requirements in order to accept these claims. It's important that both the employers and employees evaluate the circumstances around that home office claim and the likelihood of a successful claim from SARS. So the information basically needs to be 100% accurate and black and white. There can be no gray area. Although the employer may have provided a letter to the employee confirming that the employer has requested the employee to work from home for a period or indefinitely, the onus of proof that the employee actually worked from home remains with the employee. So although the employer may have provided this letter, it's not enough for SARS to accept that claim. The employer cannot guarantee SARS that the employer actually worked from home. All they can guarantee is that the employee was not present at the employer's workplace. It's quite possible that the employee went and worked at another venue because it was more conducive or more suitable work environment. In this case, the employee would not be able to claim a work from home or out of office expense. The section of the home use must be regularly and exclusively used for the purpose of the trade. This means that even if one worked from home, the actual area allocated must have regularly been used. Not regularly using the allocated area disqualify the employee from claiming. Again, the burden of proof remains on the employee. Expect challenges from SARS in this space, have very strict criteria, and we have seen a lot of disallowed home office claims. Regarding the exclusivity, if the employee works on their laptop at the dining room table, it does not constitute an area exclusively used. As such, they won't qualify for claiming of home office expenses. If they do have a properly designated and equipped area, this would contain the notice. Letting children play or watch TV in that area, it could be difficult for SARS to prove. Having toys lying in that area may lead to being regarded as not exclusively used. Essentially, what SARS is saying here is that you would have had to go out of your way to create an actual office at home. It cannot be dual purpose. It cannot be used a little bit here, a little bit there. It needs to be exclusively used regularly for the purpose of your trade, for the purpose of generating your income as an employee. For working couples who are both trying to work from home, you may also have challenges. If you are sharing the same home office, it's not deemed as exclusively used. So again, if you set up a home office, you and your spouse or you and your partner are both working from home, you're both wanting to claim a home office expense, If you're sharing an area, again, not exclusively used, will not qualify. If both parties put their tools of your trade in the area, it's not seen as being exclusively equipped. Again, with regards couples, you may need to consider putting up drywalling or a roof high screen in the home office in order to get around this. It sounds a bit silly, but it's a challenge that needs to be overcome, and it's a challenge that is something that SARS is going to challenge and use in order to disallow the claim. There's a concept of mainly. If the employee in their home office meet all the requirements, much of the employee's time during the work from home period was spent out servicing clients at the client's premises, then the time spent at the client must be compared to the total time that the employee should have been using the home office. If the time at the client was more than the time in the home office, the employee they cannot claim any home office expenses because they don't meet this mainly criteria that SARS has included. It's going to be a hard one for anyone to prove. Careful though, as the travel logbook could be the proof that SARS refers to as work was not mainly done at home. So if you're an individual and you are receiving a travel allowance and you're wanting to claim a home office expense, make sure that your logbook and your home office expense run parallel to one another and that they're not contradicting one another. Finally, for those taxpayers who have installed a fiber line and connector in the office, you can't claim any of these expenses. And if you want details on that, you can refer to section 4.6.2b of the interpretation note from SARS. The content of the interpretation note should be carefully studied by all taxpayers contemplating making a home office claim in the annual tax return. SARS is likely to challenge every such claim, and in a lot of cases, the deduction claimed by the employee may not be worth the effort. It's also important for employees to know what they're getting into before taking SARS on, and not only wasting valuable time, but also getting extremely frustrated. To better understand the legislation, employees are advised to consult with an experienced tax consultant and with experience in this field. This is now the second year that we will be going through this process. So if you do have any questions, pop them in the question and answer box, and we can get to them towards the end of the webinar. Last thing to take into account when deciding whether or not you want to claim home office expense is the capital gain tax implications. So if you own your home and you are wanting to claim a home office expense, this is something that you need to bear in mind. The portion of the capital gain attributed to the property's use as a home office can be calculated based on the number of years a home office deduction was claimed and the number of years of ownership. So basically what this is saying is that your capital gain is going to be affected by the home office expense that you've claimed in previous years on previous tax returns. Here's an example. If the home was owned for 12 years, of which 4 years a 10% deduction for home office was claimed, and the gain was 2 million rand. So your total gain on sale of home was 2 million rand. Capital gains would be calculated as follows. So you would take your 2 million rand gain, you would apportion it and times it by 10%, which then gives you the 66,666. Total gain is your capital gain exclusion. So it's going to be your 66,666 less your 40,000 rand capital gains exclusion, do 26,666 inclusion for capital gains tax purposes. So that 26,666 is going to be subject to capital gains tax should you sell your property after claiming home office expenditure. Moving on from home office to travel allowances. As mentioned previously, SARS has clamped down on logbooks and the detail provided when making travel claims against travel allowances. Again, I must stipulate that the cost price of the vehicle is vital, and proof of that cost price is vital. It's also vital that your logbook shows the correct details. So SARS is wanting to see the correct dates. They're wanting to see opening kilometers, closing kilometers, total kilometers, business kilometers, private kilometers, your starting destination, your end destination, and a reason for the travel incurred. So they're coming in and they're wanting a lot more detail to ensure that obviously that the travel is valid and it's a valid business travel expense. Travel claims are currently being disallowed due to invalid logbooks, and in most cases, this means that a taxpayer goes from having a refund due from SARS to having a liability payable to SARS, which is not a case that anybody wants to be in. We strongly suggest using the SARS logbook templates to complete your details. This gives a good breakdown of all the information that SARS is wanting, line items, and we found that by submitting it on a SARS template, SARS are more likely to accept. Moving on to the bank details on your return. So initially, when you registered for e-filing or for taxes, you may have had a different bank account and you've got to a point where you do a refund from SARS and they're not paying it out to you based on the fact that your bank details are invalid. Bank details can be changed on your e-filing profile by updating your RAV01. So this RAV01 is your SARS registered details. SARS will then validate the bank details. Usually what happens here is once you've updated that RAV01, it has been reviewed by SARS, open up a portal to upload your bank details. And in the event that they are unsuccessful and your upload isn't accepted, you would need to book an online appointment. Prior to the date of your appointment, SARS will send you an email or an SMS with your case number. With this case number, you would then need to go to sars.gov.za, where you would use their online services, and what they would do is you choose to upload supporting documentation. You would put in the case number received and include the supporting documentation that SARS has requested. This all needs to be done prior to your telephonic or video call because SARS processes this information prior to calling you. When the SARS consultant then calls you, they will then verify the information you've uploaded with you either over the phone or via your video call and update your banking details accordingly. That is the end of our brief overview on the income tax for 2022. Does anybody have any questions for us? No questions in the Q&A at the moment. If you are still contemplating or you come up with a question a little bit later in the day, you're most welcome to send us a mail at tax@hrtalk.co.za. We can get back to you with regards to your query or your question. If you're needing any assistance with tax returns or historical tax returns, please do pop us a mail as well. We're more than happy to assist you.
Perfect. I have included the email address in the chat box if anyone wants that email address. All right. So
let's see. Oh, hang on. There are a few questions, sorry, in the chat box.
No, that was just about the slides. So I think that's fine there.
Perfect.
No Q&As. All right.
Nobody have any questions?
Perfect. Well, okay. Pleasure. Let's see. Okay, well, if there's no questions, then yeah, if anyone just wants to take down that email, and then you can just either pop, just direct it to either Meg or myself, and we can assist you on that.
Just a last one, in terms of the SARS logbook, this can also be downloaded off sars.gov.za. So it's there, it's as a PDF, very easy to download and complete your details on that PDF document.
Awesome.
Perfect. All right.
Perfect.
Well, any questions do come up, it's great to pop us a mail, and I hope you all have a wonderful day.
Perfect. Thanks, Meg, and bye, everyone.